The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. This is Tom O'Brien. We got Darrell is growling and prowling today with his daughter. She's doing a fundraiser, and she's doing a bunch of laps. It's a beautiful thing. Market-wise out here, we have, folks, is this. You got the Dow Industrials right now down 59. Nasdaq's off 19. S&Ps are off 8.5. We have gold down 520. Silver is actually up with gold down. Pretty interesting. Silver's up 1 penny at 18.61. You have platinum down 12. Oil is off 19 at 92.64. Bonds. You have the 10-year down 12 ticks at 124.03. 30-year is off a full point plus 3 ticks, and a point is 32 ticks, folks. So you get 35 ticks down at 136.16. King dollar is flat at 84.30. The euro is up 14 at 129, and the yen is trading up 14 at 107.25. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You'll see the banner on the top, on the side. You can bring that banner up, bring up the platform. They'll put $25,000 of funny money into your account, and you can see how these contracts trade. You get volatility back in the marketplace, whether you're trading options, whether you're trading currencies, futures, equities, all of the above. Bottom line is that inside that platform, you can trade the currencies, you can trade the indices, you can trade the commodities. Now, in that texture, let's go right over to the S&P. Why the S&P? Because I like trading the S&P. And I mean, Jay loves this Dow. I know, 3-to-1. Okay, so let's take a look at the cash S&P, for the future S&P first. So this is what we did. Thus far, first off, what we have is this. We're at 1989, okay? It hit a low out here of 1986 today. Now, you have volume at that low, which is a beautiful thing. The real important thing is that we have volume at the low coming out from yesterday at 1040. What I'd love to see here is just some kind of a dead cat bounce. Get this S&P. I don't think I can get up to the 1994. I'll take the first leg up there at 1992. That's where, I'd like to see that get up there. Why? That would be the sell inside that S&P. Now, if we shift gears for a second, because gold very well may be the trade out here today. So we take a look at the gold market. This is what you have. Gold market right now is down 480. You're at 1234, which is problematic for gold, period. Not bad for a Friday, but it's still problematic. It is light volume. You get 72,000 contracts right now. And inside that gold market, this is what you have. The first expansion down had some juice in it. The first expansion, this is at 8 o'clock. Okay, so when we went to 1234, we hit a low out there. That had volume in it. Then you bounced slightly, and then this next one down, though, that spiked down to the 1231 also had juice in it. So I suspect the 1231 is going to get hit again. So what you'd have to do with that one, if you're going to buy the gold contract, I'd let that one get down. We'll put this on a 1 day so you can see this a little bit clearer. Even though that was a spike down, they were looking for sells underneath that market, and they found them, folks, okay? When you have spike downs or spike up as a marketplace, what that's about is that that's a large operator that is pushing. In this case, that would have been a futures trader that's pushing lows to see, are there more sell orders below the lows? Well, guess what? There are, and they got hit. There's 6,700 contracts that got hit when we just plunged down at 10 o'clock to the 1231 area. So what that sets up is that sets up that it wants to get tested at that area. We go over to the NASDAQ for a second, and the NASDAQ today, folks, for here and for the week is going to be all about Apple. Why? Because the Index 100 is going to be about Apple. What you have with the Apple is this. We're going to be right so close to this number. The number we're dealing with on the weekly basis is 100.74. And right now, Apple's at 101.46. What you can expect out here, what I expect in general out here today is really just a sideways day. You know, we'll see whether we get any juice on each one of these downdrafts. We haven't got any juice thus far on the downdraft. What is intriguing here in a huge way is this. It seems, I brought this up in my show yesterday, it seems that no matter what way the bond goes right now, the market's going to lose. And this is intriguing. This is very unusual, okay? And what it is that bonds, prices go down, rates go up. Market's not going to like it. Why? Well, because rates go up. That's the first one. Now, and we have just gone from 140 to 136.07. Now, you're coming back into that area, and I suspect we can actually get it to the 136.0. We're right there, actually, right now. 136.08 is the highs of the lows of July 31st. You know, we'll see if that's, you know, where it wants to stop. Bottom line, you know, you can actually get down to the bottom of that swing point real easy, 134.31. Bottom line, though, rates, price go down, rates go up. Okay, so market, well, let's put it this way. It's not that it doesn't like it, but the market won't go higher with it. That's why we get a flat market. That's the first scenario. Second scenario is the same deal, which is really wild. The bond market goes up, rates go lower. What that's all about money saying, I want into something I know I'm going to get my money back at. So it's really intriguing where we are inside that marketplace right now. Some of the high volume stocks in a low volume market, you get Ultra Salon. That's up big. That's up $19. That's up almost 20%. Trading at 117. We have let's see, Yahoo is up 68. You got Bank of America up 16. Let's take a look at some of these Dow stocks out here. We have inside the Dow, you got Caterpillar down 98. 3M is off 61. You got Big Blue down 35. American Express is off 44. Oxy is down 60. Inside the, let's go over to the, inside the oil complex, that's getting hit again. You get ExxonMobil's down 83. We got Apache off $1. Inside the financials, JP Morgan is up 42. If we go over to the XLE for a second, we take a look at the XLE. Okay, so the XLE right now is, your B point on the XLE is 94.49. We're under that, and it looks that what we're going to have out here before the end of the day is that the XLE is going to be a large ABC structure on the way down. Let's see, 45 million. Doesn't look like it's going to be able to get the volume, but it's got the price going. You'd need, to get a confirmed ABC structure on the way down the weekly, you need 65 million. I don't see it doing it. It's going to do about 55 million. Your B point is 94.49. We go back to the broad market again for a second, looking at this S&P, and this is what we're looking for. Inside the S&P, I'm going to bring up the Nadex platform a second. We'll look at some of these contracts. So inside, come to daddy. 1 second. Here we go. Okay. It's getting close. I'm going to put this on a 1 day. So inside the S&P, what we have is this. Your future is at 1990. The first level that you can look at will be the 1992 level. And if we bring this up, let me get this over here. Okay, so if I bring this baby up, I put the S&P and see the 10 to 12, 1992. You only got a 1990, you got a 1995. That's interesting. Okay, so 8 to 4, 1995. Ooh, maybe I get a 1995 out of this. See, what's going on here is that the top of these boxes, folks, okay, which is important to understand, you want to be bottom. If you're selling, you want to sell as close to the top of the box as you can. If you're buying, you want to buy close to the bottom of the box you can. And what happens there is this, is that the correlation between your risk versus the reward goes up dramatically. Why? Because at the top of this box, like if I just stay with this 12 o'clock on the E-mini, what you have is that we get a 1990, and I don't want to sell it too far out of the money, that's for sure. That might fly, though. We'll see how that shakes out. The 1990 right now, I'd have to sell that. I sold... That's pretty interesting, actually. So the 1990, this gets interesting, doesn't it? Okay, so check this out. This is interesting. So the 1990, I could risk $70 to make $930. And that would be, what the trade there is this. That's actually a good trade. I like that trade. Okay, so what that trade is that trade would be by noontime, you are under 1990. I'd have to stay under 1990 to make money. I'm still going to wait to see how this reacts to the 1992 area. The reason being is that I'd love to be able to sell up at the 1995-25. That would really be sweet in a big way. And that's the way that the S&P is coming right now. That's exactly what we'll wait for, because thus far, you gotta love. I love this program. Thus far, let me see this for a second, minute-wise. Come on, where's my clock? Okay, so we're at 10:17. Thus far, we've had 16,000 contracts. You're going into 19,000. So that said, hey, guess what? That wants to do it. The key is to just give it a little bit more time. Oh, thank you. ES, yeah, thank you. 1 second here. ESZ4. I wonder why I'm thinking this is too nice. I got to get this. We rolled over, and I got to get this other contract up. Okay, so hold it. I got to get rearranged here again. 1984. Okay, so 619,000 ESU for 500,000. I got to make sure I know what contract I'm on first. At the first break, folks, I will. I got to. Now, this is important too. What happens is this: is that because we're in a rollover, folks, right? You have to understand exactly. Thank you. What contract you're trading out? So we are still trading the U contract, I believe, on Nadex, which would be beautiful. That's what I want, because the way that was just set up on the U contract versus the Z contract was a dramatic difference in the reward versus the risk. Okay, so 1 second. Okay, so we're at 1992. That's a beautiful thing. And this is going to make the 1995. This is going to be a nice setup, man. This is going to be a nice setup. So thus far, you just want to let this thing rock. There's nothing in the middle, but I expect once it's going to get there, and this is where you just want to set this trade up. So if I go into the 1995, thus far, right, you'd be selling at 1992. And that gets interesting. So watch what the difference is. Right now, if you throw that trade on, if I sell in 1995, 10 contracts, I'm risking 300 to make 7. That's not going to be good enough. That's not even close. You let this pop a little bit more, and what you're going to end up seeing you're done is that should get down to about $100 at that point, and making 900. And the correlation would be I would have to get that back to 1985 by noon, and it already hit a low of 1986 with volume. So that would be the target. Stay right there, folks. We're coming right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now you have the Dow down 25, Nasdaq off 12, S&Ps are off 5. And as Jay in the Den is talking here, this is a cool one. So he has just sold let me go through this, the 415 Wall Street 30, which is the 16,750 to 17,050. Bottom line, it was a 6-to-1 ratio, giving up only 9 points. Now, 9 points in the Dow was a joke. So if we go over to the Dow Industrials for a second, this is a 415 level, too, which is really freaking cool. So inside the Dow, now what you can do if you're trading inside the Dow and just want to get that volume characteristic quick, the quickest way would be just to go to the DIA. So what do you have with the DIA? Well, it's really sweet because the DIA at the downdraft at 10 o'clock has volume. So that's saying that the 169.75 wants to get hit before the end of today. We go back over and we take a look at the Dow Industrials. That level there is 16,972, which, of course, is much larger than what he just gave up. So when you're buying and or selling something inside the Nadex platform, folks, just like an option market, you're going to give up points. In this particular case, he only gave up 9 points on the short side, which is really dynamite. I mean, it's huge. There's no doubt about that. 9 points in the Dow is like nothing. And another way you can do this, by the way, okay, is that when you break down an indice, and I can see why he's trading the Dow, too, is that when you break down the indice, the weighting structures inside the indice can give you a clue, right? So what you can do, if you're watching Tiger TV, I'm just bringing up what the weakness is versus the strength inside the Dow. And what's really cool is that ExxonMobil is the weakness inside the Dow, Caterpillar's inside the Dow, Microsoft is only down 34, but inside the Dow, and Verizon. But out of those, what you have is that ExxonMobil is in an ABC structure on the way down. If you go over and take a look at ExxonMobil, it's only down 87 cents thus far. We put this on a weekly basis, and what you're going to see is that the B point on this needs 56 million shares. We've done 43. It's going to be about 53. It doesn't look to me like she's going to be able to recover any price, though. So what that sets up is what? That sets up a test down at 89. Okay? So in that structure, what you have right off the bat, inside the Dow, you have one of the heaviest weighting structures that wants to go south. And if you look at that whole oil complex, bottom line wants to go south. Now, that's on a technical basis, but it's also on a fundamental basis. Because what's going to happen in this war, trade war with Russia, is going to intensify. It's going to basically engulf these oil companies in a huge way, particularly ExxonMobil. Why ExxonMobil? Because what has had is that they were one of the largest. They made a deal with a couple companies in Russia and Russia themselves to explore the Arctic, and that's where they want to get this juice out of, meaning their next growth out of the Arctic. And my understanding is that this should be out here today. Is that that's going to get stopped? So and the first get-go is normally the hardest. They could pile on after that. The first one is the hardest. I suspect that all these oil companies were fighting like crazy for that not to happen. Let's go over to that gold market. Gold is volatile out here. Looks like we're going to get that test that we were talking about when we first started. Right now, we are at 1232. It wants to go for it. Now, check it out. Now, this is how we trade gold. Okay, so this is going to get cool. So the spike that we're looking for is 1231.10. We're at 1232.40 right now. Okay, let me go back over to the gold market for a second. So now I'm going to go into the commodity spreads. And I happen to like the spreads, folks, okay? You can do the binaries. I just happen to like the spreads. You're not going to get a grand slam on the spreads, but your risk versus your reward is pretty dramatic. We go into the gold. Now, with a Friday on gold, folks, okay, you can do 8:30 to 1, you can do 10 to 12, and it really has to do with the upper end again. And the upper end thus far may be a little bit too far for me. Let me just see this. So the upper end right now is 1240. And yeah, see, I don't like that deal. And this is why. A 1240 with gold at 1232, that's a 50-50 deal both ways. And that is really dangerous with gold. Let me go into the 415. Okay, so this is what you have. This is cool to understand, though. 1250, 1232. Well, you wouldn't be trading gold right now. We'll go back to the S&Ps as we come back, and I'll explain why you wouldn't be trading gold. Because the 8 points up versus what you can go down, the risk reward just doesn't work. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, you get the Dow down 25, Nasdaq's off 12, S&Ps are off 5.5. And if you haven't test drove the Nadex platform, folks, just hit the banner on our website. You can bring it up, test drive that platform. If we take a look at, we're just being patient here with this good old S&P. Okay, let me finish up with the gold contract for a second. So, what you had inside the gold contract is this, folks, okay? Let me pull this up in front of me again. Okay. So if we go over to gold, and this happens because it depends on when the contracts got up, number one, and how close they are. And this would be whether you're a bull or a bear, by the way, folks, okay? So right now we're 1231. And what would end up happening is this, is that if we went to sell it, okay, went to buy it, rather, well, this gets interesting. Okay, I got a 1232 here. Let me see what this looks like. So I got a noon 1232. No, it doesn't work either. No. That's weird. Oh, okay, hold on 1 second. Hold it. Sure it does. Yeah, no, this is going to get cool. Okay. So check this out. Okay, so we're down at 1230 now. Oh, this is going to be interesting. Okay, so we do have a contract. Okay, so now let me pull this up. 1 second. So We just broke through the lows. We're looking for the test. Now, as you're breaking through the lows, folks, what you have to absolutely do is you say, okay, are we going to break through them with volume? So your volume characteristic out here is 67,000 contracts. We're 6 minutes into it, and thus far we've done 4,700. The key here is just let this play out for the next 3 minutes. But there is a contract, and it's a beauty, too. So by noon, let me see how much I have to give up here. So this is interesting. So what just happened, no, not really. The question is, am I going to give up? We're at 12:30. And right now you'd be giving up, I could risk $40 to make $1,400. That would be if gold went to 12.47. It's not bad. That's with 10 contracts. You can see that you can really play with these things. You know, it's not ready to be bought yet. Gold's certainly not ready to be bought. Why? Because what has happened is that we're at 12:30, flat out. You've done, the contract value is going up. Right now we're at 56,000 contracts, 5,600 rather. And that looks like it's going to basically take out the 6,700. Yeah, it is. So you got to wait that out. Bottom line, though, is that there's definitely contracts out there that you could wrap your head around. But the key is what I do on a continual basis. You want to line up the volume, line up the swing point, and then line up the contract. You know, we'll let this play out for the next 3 minutes and see where that shoots out. Because right now we're at 10:37. And the parameter will go like this, folks. I would want lighter volume. And when I say lighter volume on a 10-minute, you like a lot lighter. Not like right now we're still at 5,900. I can just tell the way that is. The characteristic is 6,700. That's not good enough. What you'd be looking for on a 6,700, you'd be looking like for 4,000, something like that. Because that's still saying that there's still enough selling pressure inside that market. That's how that shakes out. Let's go over to the S&P for a second and see how that one is setting up. So on the S&P, what we're looking at is we're saying that we want to get as close to the 1995 as possible. Thus far, we've got to 1992.75. It's going to build up. You know, the way this S&P is right now, you know, you're going sideways, but as you're going sideways, there's still no downward pressure to go hit that low. So when there's no downward pressure to go hit that low just yet, guess what? What that is doing is that it's weak, but it looks like it wants to hit and get up into a higher price point. We go over to the bond market's getting smoked. Let's go look at that bond market anyway, because what we do have is that, and see, this is where the bonds are tripping themselves. Okay, so we've done 253,000 contracts on the 30. You're at 136.03. That says that the bond can get down to, this is pretty intense, 134.31. The swing point here is 134.31. So there's no reason that it can't get down to that level. The real key is it going to get down to that level today? What is intriguing is that, and if you want to see how politics, folks, and power tries to rule and manipulate, one of the best things you can watch is the aspect of how Scotland is trying to break away from the UK and what the war of words is all about. And you're going to see the hypocrisy inside of it. And what you get is this. So check this out. And I am prejudiced, folks, by the way, in that whole thing. I'd like to see Scotland break away. But in that context, but check this out. This is pretty cool. So in the context of what's going on, the banks, UBS, not UBS, what banks? The two big British banks. Yeah, it is UBS, is it? No. Yeah. They are saying that they're going to leave Scotland if, in fact, Scotland decides to break away. Now, remember something. There's only 5 million people in Scotland. The amazing part, which is just absolutely amazing, is that as they're saying that, the independence race itself, the British pound, they're getting ready just in case there's a run on the British pound. And simultaneously, if in fact Scotland does break away, they think the British pound can go down 10%. Now, if that means the British pound can get down 10%, what would that mean on a common sense basis? Well, guess what? That means that that's how valuable RBS, thank you. That means Royal Bank of Scotland, RBS. That means how valuable Scotland is to the UK. Isn't that cool? And as to the threat of the banks leaving, guess what? The banks aren't going to leave. Because you know why, folks? You know what this is all about? This is all about the North Sea oil. The North Sea oil, if in fact that they break away, Scotland will own 90% of the North Sea oil, because that's where that line comes down. And that's what this is really about. And that's the hidden aspect inside all of this, you know, as to, you know, because when you're talking about only 5 million people, and you're talking about the North Sea, and where that line is, okay, it's a huge deal. You know, there's no two ways about that. So, and, you know, one of the targets said, well, there's no army to defend it. Well, guess what? You're going to be really surprised how quick the good old USA would be out there defending it. Because the fact of the matter is, listen, you will see where this shakes out. It's going to get interesting, though. And it really has to do with, you know, we'll see where this goes. But the volume, oh, here we go. We got to go over the gold again. 1 second. Because gold just broke down. Let's take a look. Okay, so now we're at 12.29, down $9. So watch. What we're looking for now is this. The expansion was way too much. Okay, we did 7,400 contracts, and if you've never, you know, listen, when you're trading the Nadex platform, folks, these are day trades. Okay, so. Inside that context, you got to deal with it, whether it's if you're comfortable with a 10-minute, 30-minute, 15-minute, whatever you're comfortable with, that's what you want to kind of do. I've been doing a 10-minute for, oh my God, it's scary now, how many years? Probably close to 2 decades. But anyway, the 10-minute, this is what you have. We came down with 7,400 contracts versus that 6,700. So we know that doesn't work, right? But when you see something like this, when you come down that dramatically, it's going to be real hard to basically get to a lower low right now with juice. So inside that context, it's like, okay, let me see what you have behind you now, because gold can rally to 1234 in a heartbeat. So you go back over the Nadex platform. We'd go back in the gold contract, and now what we're looking for is this, and they have it. I think it's a 30, 1232. Okay, that's a 1232. I'd like to get a 1230 at the bottom. What I'm looking for now, folks, is that I'm looking for 1230 at the bottom. And by the way, Darrell's analyzer will pick it up a lot quicker than I'm picking it up right here. But let me just see. 10 to 12 is 1232.50. 8 to 11 is 1220. That's too far away. Okay, this is going to get interesting. So now 1232.50. That's still too far. You see what's happening here now? Okay, now this is where the next layout is. So check this out. The next layout, meaning where I'd want to buy, because of the Nadex platform now, not because where gold is, would be as close as I can get to 1225. The reason being, there's a 1225 to 1240 level that's too close. Is that 11 a.m.? Oh, no, there's the one, 1225. Okay, so we got, let me see, at 4 o'clock. Yeah, it'd be to noontime. So there's a 1225. By 10. Okay, so thus far, and it's right at the money. This one gets really interesting. So check this out. We're at 1229.10, and right now I could buy a 1229.3 at 430. One contract would be $43 to make 100. Now I still wouldn't do that one. The reason being is that I want to get closer to that 1225. But what I really like is that the spread on that, I'm giving up nothing. So if you, in fact, trade gold futures, this spread is amazing. We're at 1229.20, and I could buy it at 1229.40. That's pretty intense. You know, it's really intense, actually. So and of course, what ends up happening there is that your trade, bottom line, is your stop, you know. And gold just moved the full deviation, which is pretty cool. Because the odds of after moving a full deviation go down dramatically, that you can basically move further within so many half hour or something. You know what I mean? It's not that you can't move further, period. It's a time aspect as to where the give up is. If we go over to the S&Ps, we take a look at the cash S&Ps, I mean the future S&P again, this is going to go after this low. That's where we're going right now. You're down $7. That low that's out there of that 1986, it's going to go after that baby, and that means that if I go back over Tiger in the Den, he's going to be coming in the money any second here, because the Dow Industrials, I can see that, Jay, what you just had with the Dow is that he's got the 7 points that he needed back in the cash. What you have right now is that all the Dow has to do is get into 17,005, and we're at 010 right now. Once you're into 05, guess what? You're going to go to the bottom, which is at 972. It'll give up another 25 points pretty quickly. If we go over and we take a look at the, see, this is where it is. So when we were talking just then, what they did do come across, you can see ExxonMobil now is down 91. The market knew this, okay, but as we were talking there, what did come across the tape is that the aspect of what the sanctions are going to be, and the bottom line is that inside those sanctions, there's no doubt, you have the whole Arctic deal on the table. That's what's going on here. So ExxonMobil itself is down 92 cents. Now let's get a small ABC structure on the way down at 96.04. We're 96.10 right now. We'll see how it hits that. From yesterday, you have a high volume low at 95.86. Guess what? That's where it wants to go. So if you are a technician, it wants to go lower. If you're a fundamental numbers person buying and selling stock, that is not a good deal inside. Getting caught inside a political position. That's what it really comes down to, folks. And that's going to be the political football that is going to be tossed around here quite a bit. Some of the Dow stocks right now, you get American Express off 37. We get Caterpillar down 75. Big Blue's down 68. 3M is off 45. You get J.P. Morgan up 45. Inside the commodity market, what we have is this. Let's see. Inside the commodity market, you got, look at the little lean hogs are almost down limit. They're down 2.2%. We get coffee off 1.5. Sugar's down 1.5. Heating oil is down 42. Gasoline is down 0.3. The gasoline market, folks, is just extraordinary. We're at 251 wholesale right now. She's broken out the bottom. Now, this is really cool because she's going to break out. It looks like she's going to be, she's going to be below the bottom for a weekly. That's going to be a monster ABC down. Your A on that is 289. Your B is 251. So you get 40 cents, which gets you 225 wholesale unleaded. That's going to get all our gas, well, for unleaded, under $3. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Now down 25, Nasdaq off 12, S&Ps are off 5.5, gold's down 950 or at 1229.50. Now this is where this gets really interesting, folks, and I am absolutely saying do not do this trade, but I just want to show you something that can be done that in the gold volatility market is really sweet in the aspect of risk versus reward. So if we go out here in the Nadex platform and you have it, so we're going to be at 11 o'clock, right? Yeah, we're at 10:54. But you go out there, and there's a 1232 to 1247 number, okay? So what you'd be doing when you're buying any type of option out of the money, of course, is a lot cheaper. Now, in the gold, that 1232, you can get it for 1232.80. But if you want to hear something really bizarre, okay? If you bought all the contracts that are out there right now, 40 contracts, you'd be risking $120, and the top side would be $5,800, okay, which is pretty sick. So if we just go to one contract, you're talking about $3 for one risk, $3, yeah, that's right, for $147. Now let's go back over to the contract because it's like, okay, where are the contracts going? And the reason that that reward is so dramatic versus the risk is that there's huge downward pressure. No one wants to own them. Right now, I still wouldn't buy them. Why? Because it doesn't matter what the risk reward is. The real key is that, okay, is there any strength in here? And thus far, we've seen no strength. What ends up happening even on a day trade, folks, is that what you want to see, if you have the out of time of the trade, what you want to see is this. First, you get the downdraft. Then what you'd get is a rejection of lower price. Then you get a sign of strength, and then you buy the next pullback. That's how you trade that whole baby out. So right now, we don't have that. And until you get that, I wouldn't be buying that whole deal. If we do go over to the GLD as to the aspect of where is it going on the daily, you'll get I'll pull this GLD up so you can see the correlation. We put this on a weekly because what's happening on the weekly, folks, is that it's coming into the bar from 120. 118.25 right now. The bottom line is that if this closes at 118.25, that means that, guess what? Gold will go down to the bottom of that 114, so don't touch it. That's how that's setting up right now. When we talk the Nadex platform, that's a beautiful thing. 1 second, hold it. Let's see. This S&P might come in, meaning you might get that one spike up. Here's the one spike. Okay, hold it. So right now we're at 1992. It just popped over these last couple bars. What we're looking for is 1995, folks. We're looking at 1995.25. That's what you're looking for. Now, inside the context of the Nadex platform, folks, depending on how long you've been listening to TFNN, we had a great Nadex platform cash trading contest. Well, guess what? I'm going to give you a heads up here. Over the weekend, start studying this in a big way. Why? Because next week, we're going to announce another $10,000 cash giveaway. So we're going to give away $10,000. Starting on Monday, you're going to be able to sign up on our front page of TFNN. So the sign up is going to start next Monday until next Thursday. I believe it's next Thursday or Friday. And then the contest will start the following week. You want to wrap your head around this, folks, okay? So that's just a heads up as to what we are going to be doing. And each and every day there's going to be, I think we're giving away $500 a day. The first prize winner is $3,000. Wrap your head around it because the spreads are, and this is what ends up happening. Even if you have an account already, you're going to be able to open another account, the demo account. It's going to be set up right on our page, and you're going to be in action. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Look forward to speaking to you this afternoon, folks. Dow right now down 16, Nasdaq off 10, S&P's off 4.5. Stay right there, folks. Come right back.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
This is TFNN.